Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ed Egilinsky, Managing Director and Head of Alternative Investments at Direxion, to discuss ways to trade commodities and related stocks. And it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me. Happy Monday.
You got it. And we had recent news with OPEC Plus cutting back. Gold breaks 2,000. Treasury prices are falling despite what we're seeing with inflation. We've got a lot to cover here. First, let's get your views on what you're seeing with the macro environment.
Well, I think right now in the equity markets, you're continuing to see a risk on for the most part. So you're seeing a lot of plays in the tech space, in particular with growth stocks, especially in light of interest rates dropping recently. So it's definitely a risk-on environment. You see Bitcoin above 28,000 and holding there. We're seeing some trading opportunities with what's going on in the financials. We could talk about that in a couple of minutes. We have a triple leverage bull regional bank. It hasn't been exactly the place to be on a short-term basis, DPST, but we have both sides of the trade on the Financial Select Sector Index, FAS, FAZ. So a lot of people trading what's going on with the banking situation, as well as treasuries with our triple leverage treasuries, bull and bear taking positions there. And then Tech L and Tech S, which is really the triple leverage off of the overall tech sector. So we're seeing a lot of action.
Yeah, well, it'll be interesting this week because we have the big banks kicking off earnings. So I'm sure you're going to see a lot of activity in those particular ETFs.
Yeah, definitely. We have a lot of short-term traders that are trading off of technicals and or fundamentals. Certainly headlines that take place, particularly with earnings, people are trading both sides of those trades, especially in the financials with them kicking off earnings this week.
And what's interesting is gold has quietly crept over that $2,000 level, or it did. What are your thoughts around there when you think about trading the commodities and then trading those commodity related names?
Well, there's definitely a bifurcation there. Certainly the physical gold had a big move in March, but the gold miners and junior gold miners, which are the commodity related equities, actually were up even stronger in March. There are a number of ways you can play it with Direxion. On the short-term trading side of it, we have a 2x bull and bear off of GDX, or the gold miners, and that's Nugget and Dust. And then we have the junior gold miners, 2 times leverage, bull and bear as well. For those individuals that want to trade gold, maybe along with a broad basket of commodities, for those strategic asset allocation, wanting to include commodities because they're concerned about inflation, we have COM, which is our broad basket tactical commodity ETF, which we happen to be long gold right now. But gold's really going up for a number of reasons, most notably the fall in interest rates and a weaker dollar. When you look at the precious metals, they're probably the most sensitive commodities to a weaker dollar. So a weaker dollar is definitely very good for the commodities in general, but more so for the precious metals. And for those of you who follow gold and silver ratios right now, when you look at the gold silver ratio, silver is definitely cheap relative to its brethren gold right now. But gold, from a psychological and resistance level, 2,000, it finally broke through. We'll see if that becomes new support for the gold commodity itself.
So it sounds as if these leveraged ETFs, they can be used for speculative as well as hedging trades, depending on how your portfolio is constructed.
Well, I would look at any of our bear products, especially if they're 2 or 3x, as short-term trading vehicles to try and capture what they feel is downside movement in that respective underlying index. But these would be looked at as very short-term hedges because you got to monitor these on a day-to-day basis, especially the 2 and 3x leverage points, whether it's bull or bear. There's a daily reset of leverage. There's compounding after a single day. So it's important for somebody to do their homework before they decide to invest or trade, I should say, in leverage and inverse ETFs. And we have a good educational whole section within our website that somebody should view before they decide to trade these. But you can use it as very short-term hedge on the short side if you wanted to, but you got to monitor these day to day.
All right, Ed, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.